Things are actually looking good. When we started off the show, we said that the market has come off the day's highs. But you know what? In just like seconds, the market has sort of pulled back and is now at the high point, as you can see. The Sensex is up almost 200 points at the moment. So it looks like the bulls are back in charge. A lot of Tata Group stocks are, at the forefront. So Titan, Tata Motors, Tech Mahindra, all of these stocks are up anywhere between 2 to about 3.5%. Auto stocks as well, Hero MotoCorp, Eicher, etc., looking pretty good. So not bad, I mean, the bonhomie over the last few days seems like it's continuing today.
Absolutely, and today's move also reflects the sort of recovery that we saw in the Asian markets. Yeah. So they started, more or less jittery, but the Hang Seng then ended at the high point of the day along with the Shanghai index too. The Nikkei only underperformer out there, ending in the red, but again, that one too was off the lows of the day. So Asian markets doing fairly well, our markets doing equally better, and at the same time, the futures for the European markets indicate a good start as well.
Oh yes, but straight to the stock making news today. The Jet Airways stock continues to gain. In fact, it's the biggest non-index gainer today on a CNBC TV18 report of a deal with the Tata Group's Vistara Airlines impending. Sources say Tata Sons chairman N. Chandrasekaran is keen on this deal. Shireen Maan joins us on the phone line to give us more details on all of that. Shireen, over to you.
Well, this is what we've been reporting for the last few weeks when our colleague Kritika Saxena had first broken the story. So this is an update on that. Talks between Jet Airways and Tata Sons are moving at a fast pace. We are given to understand that N. Chandrasekaran, chairman of Tata Sons, is likely to take the proposal to the Tata Sons board tomorrow. Now, remember, Chandra has previously told us that the aviation business is a low multiple business, and unless you actually have scale and size, you end up being a fringe player, which is pretty much what has happened to their two aviation businesses in India, whether it's Vistara or Air Asia India. So the Jet deal would be beneficial if the merger does go through with Vistara. Then it not just gives them a leadership role or an attempt at a leadership role in the domestic market, but also the lucrative international operations and routes, which is what Vistara has aspired to operate on from the time that it entered India. But there are several imponderables. One, the role that Naresh Goyal will play. The Tatas are keen that Naresh Goyal gives up majority, but will he want to retain some stake as well as a board position is the question that will be discussed and debated over. We are also given to understand that Tata Chairman Emeritus Ratan Tata does have reservations with respect to this deal, and that's largely on account of the dealings with Mr. Goyal and what role he may or may not play if this were to go through. Also, the possibility of Tata looking at only assets and not the whole company, would that be viable going forward is another question and an option that the board will consider. So tomorrow we may see some clarity on whether the board gives the go-ahead for the due diligence as well as talks and negotiations to continue. I am given to understand that perhaps there is a Jet board meeting scheduled for the end of this month. So these are some of the questions that they will have to grapple with, but it looks like it's moving to the next stages. And this also has the buy-in from the government. We are given to understand that government would like to see this deal go through because they don't want a situation of seeing another full-service carrier go down in India, which would be bad for Jet in particular and Indian aviation in general.
Shireen, thanks a lot for that. Jet Airways up about 7%, trading at the higher end of today's range. But just keep an eye out on the markets. We're seeing a zoom up on the Sensex. At one point, just a few minutes ago, it was up 200 points. Now it's 250. The Nifty itself up 65 points. And that bit of uptick could be attributed to Reliance, which has moved off the low point of the day. And all the metal stocks, they're doing fairly well as well. JSW Steel, Tata Steel, all of them at the high point of the day. But we're talking about some stocks which are at the low point of the day. Vodafone in Idea is one of them, down in trade on the back of a weak set of second quarter numbers. At the same time, the company looking to raise some funds. Rima is here with more details. Rima.
Very disappointing numbers, and you can see the stock price react to that first time as a consolidated entity. So the numbers include Idea standalone for the months of July and August, while September is for the consolidated entity. Much weaker than expectations with the revenue growth. Revenues coming in at 7,600 crore, margins at 6% versus Bharti, which had margins of 21%, and a loss which is nearly 5,000 crore rupees versus expectations of 2,700 crores. Yes, there was an exceptional item of about 410 crore, but even if you strip that out, way higher than expectations. the EBITDA trajectory for the company has deteriorated very sharply. So if you see the 3 months combined pro forma numbers, which means Idea and Vodafone, if you'd combine them for the months of July, August and September, then the company estimates that margins would have been closer to 8%, 8.1%. But the reported margins are at 6%, which means as the months progress, the EBITDA trajectory actually deteriorated. The other problem is the very high debt on their books. So leverage is at 1.1 by net debt is at 1.1 lakh crore rupees. They have announced a capital raising plan of $3.5 billion. $2.5 billion will come in from the promoters and $1 billion will be from the markets. But that hasn't allayed any market concerns. So two big problems. Competition is eroding their financials. Their EBITDA has come in at 6%. And secondly, the very high debt on their books.
Okay, that's the biggest loser this afternoon. Thanks, Rima, for that. But Grasim is also down over 7% despite strong results. Vodafone Idea's plan to raise funds has spooked the street. Nigel is here to give us more details on that. Nigel.
Well, Vodafone Idea's numbers came in overnight, and the best part of news for them was that they were looking at some additional capital. Well, for Grasim, that's the worst part of news because the numbers look good. But otherwise, in fact, if Vodafone Idea is going to be raising close to around 25,000 crores, and they've said the promoter entity is going to be bringing in around 18,000 crores, the AB group on the whole will be putting in nearly around 7,250 crore rupees. Now, the street is working with Grasim dishing out nearly around 2,500 to around 3,200 crore rupees approximately. Because just looking at the shareholding pattern, well, Grasim holds roughly around 11.5% stake in Vodafone Idea. And why is it not good news? One is because, the Astas have large capex plans of their own for the standalone operations. And the second factor is that, if they're going to be putting in this money, then it's going to be increasing the leverage in their books. To put in some numbers, currently Grasim is a net cash company. They have close to around 1,000 crores, but they have capex of around 7,500 crores for the next 2 to around 3 years. So effectively, all the cash they'll be generating, Astas was going to be, allocated to this capex that they've lined up for their core operations. And now with this additional money, it's going to make them actually a net debt company. Bottom line, the Vodafone Idea investments, that's what's going to increase the leverage as well as the finance cost for Grasim. And they're allocating capital away from their core operations. Additionally, Grasim holds nearly around 55% stake in Aditya Birla Capital. They have plans to grow there as well. So the street doesn't like it too much. Deutsche Bank, they've increased their holding company discount for the company than they did earlier. That's what's reduced the share price, the target price around 1,250. Similarly, even Kotak, they have in fact downgraded the stock to add from buy, and they've reduced their target price as well.
All right, Nigel, thanks a lot for that. That is Grasim down about 8.5%, but Vodafone itself, Sonia tells me, is now down 12%. So at the low point of the day, the street not taking that too well. Another stock which is lower in trade today, lower by over 7%, is Yes Bank. And this after Ashok Chawla has resigned as the non-executive independent part-time chairman of the company with immediate effect. This announcement came by last evening. Ritu Singh, who broke the story earlier, now joins us with more details. Ritu?
Well, Ashok Chawla's resignation, as we understand from sources, is a likely fallout of him being named in the CBI charge sheet in the Aircel Maxis case. Now, we do understand from the sources we have spoken to that at least 2 letters were received by Yes Bank involving Ashok Chawla's suspected role in the Aircel Maxis deal, including one last letter that was addressed to the NSE and also marked to Yes Bank from a Supreme Court activist lawyer. So thereafter, the board of Yes Bank delegated the investigation and the action to the Nomination and Remuneration Committee, that is the NRC. Yes Bank also officially consulted with RBI on these charges against Ashok Chawla. Both internal and external legal opinion was sought on Ashok Chawla's fit and proper criteria with respect to him continuing as the chairman of Yes Bank. And it was advised from all of these quarters that it would be in the best interest of the bank that is currently, itself in a tender spot right now if Chawla were to separate himself from the bank. And in the, with the last NRC meeting was held, I think, about 2 days back, after which Ashok Chawla on his own chose to submit his resignation, till at least such time that this matter, his name is cleared in the Aircel Maxis deal.
Okay, well, thanks a lot for us. Ritu, stay with us. SR Steel Asia Holdings has also filed a caveat in the Ahmedabad NCLT. What are the details that you're picking up there?
Well, the RIAs are just firming up their plans to see how they can wrestle back control of their company, which so far seemed like a tall ask. Now we understand that SR Steel Asia Holdings, which is the holding company of SR Steel, that has filed a caveat in Ahmedabad NCLT, that is a motion to join the proceedings. Now, this caveat could mean that SR Holdings, that is the Ruiyas, could be heard even before ArcelorMittal's offer is taken up on the 28th of November. This will offer the Ruiyas a chance to make their case, for a repayment of the company and withdrawal of the company from insolvency proceedings under Section 12A. Remember, they had made an offer of 54,389 crore rupees to all the creditors. They had offered to pay the operational creditors in full, as opposed to ArcelorMittal, which has only made a partial payment to operational creditors. Again, what the Ruiyas have offered is a very unofficial offer. They did not show the source of funds. This is just a letter, and no concrete action or earnest money has been deposited. So the lenders have not entertained this plea so far. But if the court agrees to hear this, and especially coming in the light of many operational creditors also moving NCLT, asking for the creditors to look at the Ruiya offer, it is possible that the Ruiyas may get a hearing, and this could delay the matter. And in that case, the biggest losers are obviously going to be the banks.
All right, Ritu, thanks a lot for that. So we will keep an eye out on that. With that, we take a short break, come back. Manisha Gupta will join us to give us a roundup of all the action coming in from the crude space. Stay with us. Welcome back. Looking good for the markets. The frontline indices all at the high point of the day, but the mid-cap index is underperforming in a couple of stocks which really stand out on the downside. Page Industries, that one should come up for you, down about 6.5% at the low point of the day. Remember, Page Industries now down about 10,000 rupees from its earlier peak seen of 36,000 rupees. Yesterday, the results came by the lowest growth that the company has posted in a decade, and you cannot disappoint the street when you're trading at 50 times FY20 earnings. At peak, the valuation were around 68 times. So that stock at the low point of the day. But let's just focus to the commodities space now. Brent is now trading above the $66 per barrel mark. Manisha Gupta joins in to tell us why. Manisha.
Well, thank you so much for that. The volatility is something that continues in the crude oil prices. It has been the highest in 3 years. What is leading to markets, being choppy is that on one side you have the report suggesting that as we get into 2019, it would be 100 million barrels per day of a demand that you would see from the global markets. If you look at the data that has been thrown out by EIA, IEA and OPEC, all the three global government agencies, they believe that it is going to be between 100 to 101.5 million barrels per day of a crude oil consumption in the global markets, which is up by nearly 1.3 to 1.4 million barrels on what we are doing in this year. That clearly has been supportive. And then, of course, there have been noises on how the OPEC and its partners are looking to cut 1.4 million barrels a day from the kind of output that they are doing right now, which is much higher than what they have been doing in last couple of years. And that in turn also has been supportive. But it is going to be higher supplies that continue into the global markets right now that would ensure cap on the prices as well. But volatility is something that you can continue to see in this space.
Okay, volatility definitely. Down 25% from the highs, but now once again, look at that, back above $66 a barrel. But moving on to some corporate action, Ujjivan is back on a strong footing after a weak Q1. It posted its best quarterly earnings in the last 2 years. The stock is up more than 8% in trade. We spoke to Samit Ghosh, the MD and CEO of the bank, who says that he is optimistic on the second half of FY18 in terms of growth.
Our expectation really is in the second half, and we've already seen signs because, we've removed all the restrictions which were there earlier, and we've opened up a lot of new areas. So we expect dramatic growth in business volumes in the second half, especially from the microfinance business. And also given the fact that, because of this NBFC crisis, number of the small NBFCs, etc., have a tight liquidity situation. This gives us an opportunity to grow our business. So we expect a very good growth in terms of both business volume and in terms of customer acquisition in the second half of the year.
All right, that is Ujjivan up about 8%. But the race for Binani Cement, that is far from over. After the NCLAT approved Ultratech's revised bid for Binani Cement, Mahendra Singh Dalmia of the Dalmia Bharat Group tells CNBC TV 18 that they have moved the Supreme Court challenging the NCLAT order.
Today we have requested Supreme Court to hear our appeal, and Supreme Court was kind enough to give us the date for Monday. So now, coming Monday, our appeal would be heard, and then accordingly, Supreme Court would decide in the matter. Nothing has changed. Only thing is that whatever missed amounts were there from our side, their side, they all have been considered. And then on certain matters, the decision has been gone in favor of UltraTech. We are very comfortable in regard to debt position, and all debts, etc., they are all tied up.
Okay, well, don't lose sight of the currency. It's near the day's highs right now. 72.10 is where the currency is. It has been strengthening for a while, so some stability back in the rupee. There you have it once again inching towards that 72.10 mark. But let's talk about some more opinion. Ankur Rudra of CLSA expects strong earnings for large cap IT stocks for the next 2 years. He also adds that mid cap IT has seen significant growth momentum in the past 1 year. Listen in and we'll be back after a break.
The large deal wins we've seen this year indicate that the revenue growth momentum will improve over the course of the end of this year, and the exit rates this year should be stronger. And hence, I think FY20 should be in general better for most companies next year compared to this year. If you look at IT as a whole, maybe there's a bit of a difference in the valuations and the corrections you've seen in the larger firms versus the smaller firms. So I think the larger firms definitely have corrected enough to make them very attractive. I think what's interesting is you have a combination of demand improvement. You have a relatively high amount of currency tailwind also, which means earnings growth can be quite strong for the next 2 years. Without going into company specifics, mid-cap IT on an average have definitely seen growth improvement over the course of the last 1 year. I think in general, the average mid-cap IT company has seen growth north of double digits, north of 10%, which is definitely stronger than the average growth you see in the large caps. So that's helped. There's also been a concomitant valuation increase across a range of these firms. Now, when you look at this quarter, what's interesting is still in the last 4 or 5 quarters, this is probably the first quarter where only 4 companies have outperformed expectations, where for last 2 or 3 quarters, almost every mid-cap company was outperforming expectations. So I think the expectations may have run up a bit in some of them, which is why you probably see misses across the board.
Good going for the market. So the Bank Nifty is actually charging ahead now. It's up almost about 1%, taking the Sensex and the Nifty with it. But the race for market share in the truck segment has seen discounting levels hit the roof in the last 1 month. Truck makers are now offering heavy discounts on products which dealers say they haven't seen in the last few years. Utkarsh Chaturvedi spoke to big commercial vehicle dealers across cities to get a sense of the price war which is clearly underway. He's here with more details. Utkarsh, you know, yesterday even Ashok Leyland was telling us that discounting has become rampant in the space. But tell us, what are you picking up now?
So as you said, when we speak to the dealers, in fact, a lot of company officials as well, they tell us that they have not really seen these levels of discounting in the past 4 to 5 years. They recollect the times of 2012 and 13, but the market was really bad is when they saw the discount. And what is more interesting here is that the market is not that bad at this point of time. The commercial vehicle market has grown by almost 49% year to year in this financial year. So the reason behind the whole discounts is the race to gain market share. Remember, the Tata Motors last year had said that they will be looking to gain market share rapidly. Ashok Leyland in their presentation has also said that they are looking to gain market share. M&M, in fact, has lost a bit market share in this whole market share fight, if you see. But if you look at the discounting levels, around 20-25% of discount levels of discounts on trucks, especially in MNHCV, if you see. So a normal MNHCV of 49 ton is around 30 lakhs. What you're getting if you're buying around 5 trucks, because you have to realize that truck purchases happen in a bulk. So you're buying 5 to 6 trucks, what the level of discount per truck is, what you get is around 5 to 7 lakhs, which is 25%. Even on an ICV or an MCV, the level of discounts are around 3 to 4 lakh rupees, which has not been seen. And what is more important to see is it is not, normally when we look at a discount, we look at the market demand going down, but that has not happened in the commercial vehicle space. It has slowed down the last quarter period vis-a-vis the previous quarter, but the demand remains intact. But what is more interesting is the discounting level, and what is happening here is that the margins can get eroded. In fact, when we spoke to M&M on this, what they said is that the level of discounts are disruptive in nature. when he spoke to Tata Motors on this, what they said is that apart from discounting, there are a lot of other things due to which we are gaining market share.
Right.
Discounting is the nature of commercial vehicles from a long time now.
All right, Utkarsh, thanks a lot for that. Discounting market share over margins is the view on trucks. But let's move away from trucks and go on to bikes now. The iconic Jawa motorcycle. The motorcycles are back after 22 years. M&M Arm Classic Legends has launched the Jawa motorcycle at an ex-showroom price of 1.64 lakh and Jawa 42 at 1.55 lakh. The new Jawa motorcycle has classic features like round mirrors, round indicators and the telescopic fork as seen on its rival Royal Enfield Classic 350, which will be its direct competition.
Oh, it's exciting, right? All that's happening in the two-wheeler space. I mean, that's the new Jawa motorcycle for you. But the king of bikes has come back. Speaking of the key competitor, Royal Enfield has finally launched the eagerly awaited 650cc motorcycles, the Continental GT and the Interceptor, more famously known as the Twins. The launch of the Twins marks the company's foray into the over 500cc segment, along with another first in its current portfolio, a twin-cylinder engine. Now, the motorcycles have been very aggressively priced at about 2.5 lakh rupees to 2.85 lakh rupees, depending on the variant. So, the base category is at 2.33 lakhs and it's very aggressive. I'm sure it's going to give sleepless nights to all the competitors like the Dominar, the Harley 750, the new Jawa, of course, and a couple of others like KTM Duke as well. So let's listen in to what Siddharth Lal told cnbc TV 18's Parikshit Luthra about the company's hopes from the twin motorcycles in India.
This is where it's all at. India is obviously our home market. That's where we have enormous brand swell, distribution. All of that's working really well for us, and this is our home market. And these motorcycles, as we speak, are there in 120 stores today. They're absolutely modern in their underpinnings. They're absolutely modern. They're going to meet your BS6, Euro 6, all those norms. They're going to meet all of that. They're fuel injected, they've got ABS, they've got disc brakes, they've got everything that you need to run a bike in a modern time, and they have sublime throttle response. That's really the big thing about these motorcycles. They're just absolutely like butter to ride.
All right, rather exciting that, but among the many things that I don't know, riding a bike is one of them. Which one is the one that you like more?
It's not too late to learn, you know, you can still ride it. I mean, the Interceptor looks really exciting and the pricing is pretty good, but I think too heavy for me. So,
all right, so Mom, Dad, if you're watching, allow me to buy a bike. With that, I think we'll wrap up on Business Lunch. Midcap Radar takes the market action forward.